In this video, you will learn the 16 best candlesticks, how to use them for trend trading, continuations, reversal trading, and much more. So hello, welcome back, and this is going to be a special video, 16 amazing candlestick signals. Make sure you watch this until the end. There's a lot of interesting chart studies coming. I'll show you exactly how to use them in your trading. And also don't forget to like, subscribe, and leave a comment under this video. It does make a huge difference, and I'm answering every comment that you leave below this video. So make sure to use that, leave a comment, and now let's get into the video. So we're starting with a very basic but a very powerful candlestick formation, the 3-candle deceleration pattern. This is something that I think general literature calls like morning star or evening star or something along those lines, and it looks like this here. You're usually coming from a very strong trending market. You have multiple bullish candles in a row. Overall, you can see you are generally in an uptrend, and you are looking for something like this. The 3-candle pattern is described by a strong momentum candle into the trend direction. Then usually you have a very small doji. Sometimes it can be a pin bar, but generally it's a candle with a very small body, which shows you that the trend is slowly pausing. And then you're looking for a very strong candle into the opposite direction, and this is here in this case a bearish candle. So this deceleration pattern shows us that the uptrend, a very long uptrend, is seemingly coming to an end, and definitely the uptrend is losing strength. And then you can see afterwards the market is completely reversing to the downside. So this is often used as a reversal candle formation, but you will see in a bit that you can also use this as a trend continuation. And you can use this directly on the time frame, or what I often recommend is that you use this on a higher time frame. So this is the daily time frame. And once you see this candlestick formation on the daily time frame, you go to a lower time frame to try to time your trade into the direction of the new trend that may exist or may be created after this deceleration pattern. What is really important is that you only look for those decelerations as a reversal after a long trending market. You don't want to look for them all over the place. They are mostly and they are best traded after long trending phases. Here we have a deceleration continuation. You can see the market was in a very strong uptrend, and you can see during this uptrend obviously there are waves. Sometimes the market moves into the direction, but then you have correction waves, and you can look at those correction waves to also find the deceleration pattern. You can see here the market was in a sideways phase, had a little bit of a move up, and then you can see 2 bearish candles, and the bearish candles are getting smaller and smaller and smaller until here you have only a small doji candle, and this already shows you deceleration. And then you have acceleration into the trend direction. So you could also use a moving average here that helps you to pick your trend direction. In this case it would be up. Later I have a very special example, so make sure to watch the video until the end, where I show you how to use moving average to do those kinds of pullbacks as well. And then you can see after you have the continuation candle, you can see then the market continued higher. So what you want to see is a trend direction. In this case it's bullish. You see that the market is in a sideways phase. During the sideways phase you look for this deceleration pattern, bearish candle, smaller bearish candle, doji, and then you have your impulse candle, a bullish candle into the trend direction, and afterwards the trend continues. It's a very common thing that you can see time and time again. Here a little bit later, after the trend has continued, we have a bullish, or we have an engulfing reversal candle pattern. So you can see when you are when you pay close attention, and this is important actually, that the candles are getting smaller. Smaller candles mean less momentum. The buyers are less strong. They're not as dominant anymore in the market. And then here a very strong signal, an engulfing candle. This red candle completely engulfs the previous bullish candle. And when you look through the whole uptrend, you cannot see any candle that is as big as this. The last time it was here at the very start of this uptrend, where the uptrend was not even really started. So you can see when you see something like that, smaller bullish candles, and then a huge candle that you haven't seen for probably somewhere around 20, 25, maybe 30 candles. This is obviously a significant signal that something in the buyer and the seller dynamic is shifting. So really, really important. And again, you can use this is the 4-hour chart. You could use this as your higher time frame direction. Then you go to the lower time frame and then you time your trade into the direction of the downtrend, for example. Here we have a continuation engulfing candle, whereas this was an engulfing reversal previously. This is a continuation engulfing. So you are clearly in a downtrend here. The market was in a sideways phase. You can draw here your trend line. You wait for the breakout for the trend to emerge. And then again, this is important. Trends always, or not always, but most of the time they move in waves. You have up waves, you have down waves, up waves, down waves. You have waves with the trend, you have wave against the trend. And when you are in a trending market, one of the things that many traders do is that you wait for consolidations, you wait for those correction waves. You can see that here. You have two very, very small, in comparison to the previous bearish candles, very small bullish candles, which show you that, okay, this is the correction phase, but it's very weak. And this means that obviously there's a very, very small likelihood that actually the market is going to reverse. It's not a very strong bullish phase, but it gives the market time to breathe a little bit. So correction phases, very weak correction phases can be very important for timing trend continuation trades. And then you can see here after the two bullish candles, you have a very, very strong engulfing bearish candle. Completely engulfs the previous 1, 2, 3, 4 candles, so a very strong bearish impulse, and then afterwards the market moves lower. So looking for those into the trend direction after or during a trend correction phase can be a very important trading strategy. Here is the pullback engulfing candle with the moving average, so I use a 50 EMA, which is generally considered a medium-term trend following moving average. And what you want to do is you look for a trending market, then you wait for the market to pull back into the moving average. And then once the market hits the moving average, you wait for a candlestick signal. Those can be decelerations, it can be pin bars. In this case, we have an engulfing candle. So you can see here after the market hits the moving average, a strong engulfing candle that completely engulfs the previous bearish candle. It's a very strong bullish signal. It's a signal that the uptrend seems to be holding. It seems to be a signal that the uptrend is also here, or the correction phase is coming to an end. And you can see how strong the market shot higher. Again, this is the daily chart. And once you see such a candle on the daily chart, you could go lower to a time frame, maybe the 1 hour, maybe even the 15 minute. That is what we do in our masterclass, by the way. Have this daily buyers approach. We have multiple strategies in our masterclass, but we have one daily buyers approach where you learn to read the daily chart and you learn to find very, very important high probability setups on the daily chart. And then you learn to go to a lower time frame to time the trade into the direction of the higher time frame bias. And those can often give you huge reward to risk ratios, potentially huge winners. And this is something that we do in the masterclass. If you're interested, check the link in the description below. We have a double top fake out. Double tops, really important. Fake outs, another great setup that I like to trade a lot. So you can see the market was in an uptrend. The uptrend here came to an end temporarily. Then we have here a second push, but you can see the market failed to continue higher. When you see something like this, that the market is strongly coming back into a previous high during a trend, but fails to make a higher close and immediately gets rejected, then this is a signal that the uptrend is probably likely not going to continue, and you better get ready for reversal trades into the new trend direction, which happened here immediately afterwards. So fake outs at double tops, really strong setups when you can find them on the higher time frames. A little bit later, we have a triple tap exhaustion. Triple taps are Moritz specialty, and again, Moritz is teaching this in his part of the masterclass. So again, the link in the description below has everything that you need. So triple taps are 3 pushes during a trend, and those pushes show you that the existing trend is slowly coming to an end, because it shows you that the trend is less and less strong. In this example, it's very obvious, very easy to see. You have a very strong uptrend here, and then you have 3 final pushes, 1, 2, 3, and you can see each push is weaker and weaker. The bulls are less and less strong. They can push the market higher. You can see we almost don't even get a higher close. You have very long wicks, which already show you signs of exhaustion. And when you can see the third one with the pin bar, then you can see, okay, this is the market. The market is really slowing down. You can see if you put a RSI indicator on this, you will have a clear divergence here as well. You have a good trend line here that you can draw as well, which will help you to time your trades on the lower time frames. And you can see then the market completely reverses. And this is a current snapshot, so there's a high likelihood that the market may reverse even lower. But you can see after the triple tap, after the third touch point here, with a clear exhaustion, there was a huge selling candle here, larger than anything that we have seen here during this uptrending phase. So very important pattern, triple taps on the higher time frames, really great setups. We have a double bottom engulfing, not a complete fake out. So here we have our previous low, the last low during the trend. And then here, the next time, the market is not even able, like in the fake out, to make a lower low. In the fake out, you will see that the market is actually pushing into a new low and gets rejected. Here, this is a general double bottom. And this shows us that the market didn't even have the strength to push lower. So the sellers already have withdrawn here quite a bit. And then you see a huge impulse candle here on the 4-hour chart, completely engulfing the past 1, 2, 3, 4, 5, 6, 7, 8 candles. So a very strong bullish candle, and you can see immediately afterwards the market really exploded. And again, this is the 4-hour. You could potentially use this to find the 4-hour engulfing candle, and then you drop to a lower time frame to find trades into the direction of this new emerging trend. And you can see you are not able to pick the absolute bottom, which is good. So you're not trying to catch the falling knife, but you get in very close to the turning point with a very decent reward to risk ratio potentially. Here we have an engulfing fake out. You can see the market topped out here after this uptrend. And then you can see we have lower highs here. And you can see something in this area. There's a huge resistance area in this area. We have 1, 2, 3, 4 touch points. And what we are looking for during such a market, when you can see that the market is really struggling at a resistance level, you're looking for some impulse move away from the level, because you want to see really that the sellers are taking over. Because at this point, it's still possible that the market may continue. But here, after this candle, the bulls are completely done and the sellers are taking over in a big way. You can see this candle here is larger than anything that we have seen here previously on the whole chart in context. And also when we look at the whole chart here on the whole screen, you can see this is probably the strongest candle that we are seeing here. And if you see such an extreme, such a significant candle in such a context, which means that after a trend, the market is not able to make a higher high, and you have multiple pushes into this resistance area, and you have a huge candle that you haven't seen in a long time, this obviously is a very strong selling signal. You don't have to be a rocket scientist to understand that this is a strong signal. And you can see it foreshadowed the previous the upcoming downtrend very effectively. Here, once this trend is coming to an end, we have a tweezer setup. A tweezer is a 2-candle setup with 2 candles that have roughly the same low. So you can see a tweezer. Generally has 2 wicks, either to the top or to the downside, depending on where it happens. And you can see that the tops or the bottoms here, the candlestick wicks, are roughly at the same low. It's almost identical at the lowest low. And you can see it is immediately bouncing back. You have a strong selling candle, you have a strong buying candle, you have those 2 rejection candles. Where is the rejection happening? At the previous low. So this has been already used as the origin of a trend, or this was actually the origin of a trend, where the complete balance between buyers and sellers has shifted. So here is the origin of a huge uptrend. So clearly this seems to be a level where it's too low for the sellers to keep selling, and it's low enough for the buyers to start buying. And this happens here again with the tweezer pattern. So if you can combine a candlestick signal with trend analysis and also look for location, then this may increase your odds significantly. Just like in here, we have trend analysis, the market fails to make a higher high. We have candlestick analysis, and we have location and everything going for us, resistance, and then the strong, huge selling candle. So once you put all the odds in your favor, you can see then you're looking at a strong uptrend here. By the way, I haven't marked this, but I just saw this is a rounding top with a head and shoulders, left shoulder, the head, the right shoulder. You put your neckline in here, another pattern that you may explore. Here we have a pin bar plus an engulfing candle. Again, the downtrend came to an end. You have a triple bottom here probably, 1, 2, and then 3. Again, you have trend analysis. The trend is coming to an end, so you're looking for exhaustion. You have the second criteria of location, strong double or triple bottom. Third, you have a huge candle, something really significant. This candle with such a strong wick and with such a strong body, you haven't seen this in a long time probably, and you are not going to see this anytime soon again. So whenever you see those three things coming together in the right context, this should really get your attention, obviously, because this is something that really makes sense to see, or really helps you understand that the buyers and the seller dynamic has completely shifted. So pay attention to those really, really important setups. Here at the end of the trend, you can see we have a strong trend coming up after the pin bar engulfing one. Then you have multiple taps, 1, 2, 3. And then at the top, you have a pin bar and engulfing candle once again. Not as strong as it's been here, but you can see when you go to a lower time frame, you will have a divergence in here. You see that the market is slowly exhausting, and you can see here, you even have maybe the signs of a tweezer here. 2 candlestick wicks, 2 double rejections, which show you that the market did try to push higher, but it did fail. You have an engulfing one, and you can see then the market dip lower. So really, really important chart studies here as well. Pin bar and deceleration here in this one. Strong uptrend here, less strong move here, you can see. And this is very important when it comes to wave analysis, actually, that you look at the length of the wave. And you can see this is a very long wave. This is a very short wave. And this means that the momentum is also slowing down. And then when you see that after a trend that is slowing down, you have your pin bar, a huge pin bar, by the way, and you have your 3 candle deceleration pattern, small bullish, and you can see it here, strong bullish candle, less strong bullish candle, doji pin bar, strong bearish candle, and then you can see the market sold off. Granted, not a huge sell-off afterwards, but nevertheless, if you use this with a higher time frame approach, this may help you get into high probability trades. Here at the right side, we have a deceleration candle. Once again, we have a strong uptrend here, very strong bearish sequence actually. Then you have a less strong bullish wave. Obviously here, very strong, less strong. You have here the previous resistance level, which comes in as well as another criteria. Then you have your deceleration candle. The bullish candles are getting smaller. You have a doji, and then you have a strong bearish candle. And then afterwards, the market really collapsed. So really, really important that you learn to read wave analysis, deceleration, location. And this is what we do in our masterclass. I can't stress this enough. Make sure to check the link in the description below. It's super affordable. You have everything, your whole trading education in one place. And let's keep going. Triple taps, which I have picked up from Moritz actually. You have 1, 2, 3 pushes. Not significantly, barely higher highs. You can see from here to here to here, the price is barely able to make a higher high. So this already shows you that the market is not super strong, right? And then here you have a lower high, which is a huge signal. After a triple tap, you have a lower high. You can see the market then collapsed, and this is the current chart. So there's a good likelihood that this market may reverse even lower if it breaks the resistance or support level that we have in here right now. But the triple tap with a lower high is a very strong signal. And the last one, inside-outside reversal. We have an uptrend here. We have a slowing uptrend. You can see the bearish, the strong bullish candle becomes smaller. And then here you have an outside bar. This bullish candle is an inside bar because it falls into this huge bullish candle. So it's already showing you signs of deceleration. Then you have signs of acceleration away from the top, a bearish candle, a strong bearish candle, and then the market completely collapses. So again, deceleration, acceleration, inside, outside bars, location, trend analysis, If this sounds like it's too much, don't worry, make sure to check the link in the description below. There is a step-by-step educational program waiting for you, and I really rely on your input, so make sure to leave a comment in the description below. If you have any questions, I will make sure I answer every question that you have. Leave a thumbs up, make sure to subscribe, and then I look forward to hearing and seeing you in the next video.